on the test. For folks who aren't here, we better stay with that. So number one on the test, all I want to know is, what is that doing to me? Oh, I clicked on there. Okay. For number one on the test, I'd like to know for assets, liabilities, equity, revenues, expenses. I want net income, didn't I? And then net income. I want to know this stuff. Does this look familiar to you guys? You've seen it before, haven't you? So I think that's the first thing I think of is I want that stuff. And it wants me to split the current assets, obviously, from the non-current assets, and those two added together are going to be total assets. And it wants the current liabilities and the non-current liabilities. I know that. I have that in my head. You don't have to write it down if you want to, but I have that in my head. What would be a really, really good idea for approaching this problem?
Label everything.
Label everything. Let's do it. Okay? Some mark on there, like how about CA for current assets? NCA for non-current assets. You know, that kind of cool thing. Okay. Revenues, put an R next to it, an expense, put an EX next to it, an equity, put an EQ next to it. Something like that, huh? Label them. Okay? And let's do all of them before we start adding them up. What do you think? Be more efficient? So let's not go through and hunt for all the current assets and then add them up and write it down. Let's identify everything first. It'll be far more effective, don't you think? Efficient? Got everything labeled. Accounts payable is a current liability. Put CL next to it or something, whatever note you want to use. Accounts receivable. Current asset, right? Can you do this, you guys? Accumulated depreciation, both of them.
Non-current contra asset?
Yeah, non-current contra asset. That's right. It is, isn't it?
For both of them?
Yeah, for both of them. One's on building, one's on furniture and fixtures. Excellent. Building. Non-current asset. Capital stock. Common stock, preferred stock. What is it? Stockholders' equity. That's equity. Cash. Current asset. Copyrights. Oh, that's like copyrights and patents. Don't do those things. Intangible assets, so it is for our stuff here, a non-current asset, right? We want it in the total assets, but we don't want it in the current assets, okay? All right, if it asks for intangibles down below, we identify it that way, right? Okay. Didn't ask for that. Okay, dividends declared. That's going to come out of equity, right? Okay, reduction of retained earnings. Okay, that's dividends declared. Okay, it didn't say payable, it said declared, didn't it? Payable would be a current liability. Yeah, it said dividends payable, that's the ones we owe. Dividends declared are the ones we declared. That's the debit side, isn't it? Dividends payable would be the credit side. Yeah, use stuff you know, you guys. Furniture and fixtures? Non-current asset. Put NCA next to that. Land. Non-current asset. Notes payable in 5 years. Non-current liability, because 1 year is the cutoff for current and non-current. This is stuff you guys know. Office supplies. Current asset, I'm going to use it up this year, aren't I? Prepaid insurance. Current asset, by the way, it could be non-current if you want to go longer, but typically current asset, right? Okay, current asset. You could assume that it doesn't say. Retained earnings. Equity at the beginning, and you know what? I'm going to take that beginning, and I'm going to take away the dividends, and I'm going to add to get into retained earnings. You're going to add net income. Absolutely, you got it. Of course, subtract that loss. You guys know this, don't you? Let yourself use it. Salaries payable. Current liability, absolutely. Sales, service revenue. Revenue. Every single one of those with expense next to it. Unless it says prepaid expense, which it doesn't. Every single one of them is a expense. Okay, now you guys do this one. By the way, to get the net income, that is it. Oh, don't do them in order. I didn't already, huh? Do them like this. You guys know what you're doing, right? Can you get revenues pretty easy here? I think it's 85,000. What do you guys think? Is it? Yeah, it's the only one. Okay. Then what? Add up all those expenses. We'll have our net income in just a second. You don't have to do that first, but I don't know why not. If it asks for revenues, I'd like that. For expenses, I'd like that. If it asks anything, right? What do those add up to, you guys?
I'm sorry. All expenses are 42,000.
Number of you have that? There's something I want to tell you guys. When I teach intermediate, everybody in the room, what are we going to need both of those answers? They have. They would not say, but they all have it. They also know that they're not going to bunch of nerds. Like they want to know how to do it. And they're terrified of fail their asses. You know, kidding, it just continues, right? Getting more statement, right? I don't want to fail anybody, I want you guys to know all this stuff, right? And I'm not gonna fail you guys. I'm not gonna let it happen. We've only done, what, a third of the points maybe? Not even that. Quarter of the points. You're in good shape. You have lots of points to go. And you could really get them. I mean, you're coming on. The last quiz was great. Do it on the test too. What's net income?
43,000.
Looks like 43. I don't know if that's the right answer or not. I trusted you guys. Okay, 43. We'll find out, by the way, because this thing has to balance. Well, maybe it doesn't have to balance. I never tried that on the problem. Okay, maybe they screwed up. They didn't give all accounts. Okay, how about current assets? Can you add them up? Whatever we put CA next to, add it up, okay? How much? 41. Sound good, guys? Everybody else get that too? How about non-current assets? I heard somebody say they got that. If two or more get it, we're probably good. Because the non-current were 107, were they? Is that right? You added up the non-current, and we got the total. Guess what the total liabilities plus equity should be if they did the problem? If it's not, I apologize. Okay. Anyway, I pulled these numbers off another problem and wrote the problem myself for the rest of them. Okay, how about current liabilities? What do those add up to? Is that all it is? Okay, there weren't many of them. Okay, how about non-current liabilities? Says it was taken from it, so it might not be everything. 40? So what's the total liabilities?
54.
If we asked for that, we should make the equity be the difference, right? Which is 90. 94? No, it is. Okay, let's see if it is. Okay, what's my contributed capital? That's common stock, right? How much is that? 40. And then if we had retained earnings, we'd have the rest. Let's do retained earnings, gang. What does it start with? 23. What's my net income that I'm going to add to it? 43. What's my dividends I'm going to take away from it? Dividends declared. 12. What's my ending retained earnings? It looks like we increased it by 31, and it was 23, so what's that, 54? Is that right? It didn't work. Well, it did work. I take it back. All right? What's ending retained earnings? 54. Everybody agree? You guys could do this, couldn't you? Let's put it up here and let's see what my total equity is. Is it 94? What's 54 plus 94? 148. Yay, we're brilliant people. Okay, now I got a question for you guys. How long do we take to do it? Talking about what we did? Maybe 10 minutes? You suppose? How fast can you do this stuff? Really, how fast can you do this stuff? If you just went through and you identified those and you added them up and you wrote it down, would this take you 6 minutes? No. 12 points you got. 2 points a minute is 100 points in a 50-minute exam. You got 60 minutes. How fast can you get 12 points like that if you just relax? Now, what happens if you look at this problem and say, I never saw one like this before, so I don't have a clue what I'm doing, so I now pay? How hard is this problem? Really, how hard is it? Could you do this problem? Aren't you glad you stayed? Could you do this problem? Of course. You guys know how to do this stuff. I'm just trying to get you to do it. Just let yourself relax and do it. And more of you are doing it problem by problem by problem. It's getting better. Okay? So.
The equity, I don't see how that adds up. Net income plus ending retained earnings. 54 plus
No, contributed capital plus retained earnings. The common stock was 40, right? And then the ending retained earnings is 54.
Okay, sorry.
Got it? So that's okay. Good question. Okay? So they just went different places. Maybe I should have done a common stock account here, a capital stock account here with 40 in it. That make it a little clearer. Probably. That works better. So it's the 54 plus the 40. Okay? Good. Well, we did 2 in class. Can we skip 2? Yeah? Okay, the bank reconciliation one. Let's do 3. And if you want to do a different bank reconciliation one, we can, but It's not worth the same way. What are you doing, machine? Give me another page. That's a strange one, isn't it? Did it crash on me? Did I push a button I shouldn't have pushed? Still writing. Well, this is going to be one long page, isn't it? We can't do it. Oh, well, we'll try it down here, and then we'll add one, huh? If we can. What's that doing? I don't know. Okay, anyway, so let's try number 3. Fryer Company uses the allowance method to account for uncollectible accounts. That's generally accepted accounting principles. The allowance account had a credit balance of $2,000 in it. So, by the way, what accounts do you suppose I'm going to be working with when I'm doing allowance for doubtful accounts? Probably the allowance. Oh, I hear accounts receivable. Yeah, that's the contra account for accounts receivable, isn't it? Absolutely. This was $2,000. Is that what they said? Okay, it was a credit, right? Okay, good. All right, and then what are 2 other accounts probably go with this whole thing of doing allowance for doubtful accounts? Bad debt expense, excellent. And bad debt expense might be based on adjusting the allowance from where it is to where you want it to be, or it might be based on what? What portion of? Revenue, sales, usually credit sales, right? We expect not to collect. If I base my estimate of bad debt expense on sales, right? I'm sorry, if I base my estimate of what I'm not going to collect on sales, what am I estimating? I bet I'm estimating bad debt expense. If I base my estimate on accounts receivable that I'm not going to collect, what am I estimating? The allowance. If you've got that, you've got it made. And a few of you are still messing this up when you did the quiz, huh? Let's fix it, okay? Right? Okay? Isn't this one that you said was still driving you crazy? Okay, let's get it straight. Listen to this one more time. If I am looking at what portion of the receivables I'm never going to collect, what am I estimating? The allowance, because what is the allowance? It's the receivables I'm never going to collect. Huh? That's what it is. Okay? If I'm taking a portion of the sales I'm never going to collect, the sales go on the income statement. What goes on the income statement of sales that represents the sales you're never going to collect? Bad debt expense. You got it made if you know that, and you just let yourself use it. Don't try to remember, or you'll remember it half the time right and half the time wrong. Okay? It'll drive you crazy. So what do we got? It's 2,000 credit. The balance of receivables on that date was 57,000. 57,000 in here, right? Then it says on January 2nd, prior to any credit sales, a $300 account was deemed to be uncollectible and written off. Oh, what do I do when I write off an account? I'm giving up. What do I take it out of? Accounts receivable, because that 300 of that 57,000, I think I'm never going to see. So wouldn't I just credit accounts receivable, you guys, for the 300? If I asked for this entry, that's how you'd write the entry, huh? Okay, this didn't ask for the entry, it asked for what the balances are. But then what would I debit there? It's not bad debt expense, because I recorded bad debt expense when I set up the allowance, didn't I? I'm going to debit what? I'm giving up. I've got 2,000 in the allowance, and I just found 300 of it that I'm not going to get. What do? Reduce the allowance. I don't need to have it in the allowance anymore. The allowance for doubtful accounts, right? That account right there. I'm going to reduce it by the 300 because I found one of them. Everybody agree? So I got 300 going here. I'm just posting it. And 300 going here. Everybody see it? That's those two. Okay? Oh, does it? Oh, present the entry for the write-off. That's B. Gee, we just got points. I didn't think I asked for it. Okay? Fantastic. Okay? That's the entry. Oh, and it wanted to compute the net realizable value of the receivables before I did that. Oh, that's hard. What do you got? What's the net realizable value of the receivables if you have 57,000 in accounts receivable and you have 2,000 in the allowance? It's 55 grand. So the first answer A is 55. I can't believe I could give somebody that easy. But anyway, how fast did you do that one? Man. Okay? How fast did you do part B? Yeah, this doesn't take long if you know what you're doing, does it? Okay? Compute the net realizable value after the write-off. This is a real tricky question. Look what happens. What are we having here? 56 what? 7? What are we having here? So what's the difference between 56.7 and 1,700? It's still 55,000, of course, because writing off the account did nothing to net realizable receivables, did it? You reduced the allowance, you reduced the receivable by exactly the same amount. What happened to the collectible receivables, in your opinion? Nothing, right? Everybody got it? So it'd be 55,000 for both of those. So A and C are 55,000. Okay, again, if you took 57 less 2, what would you have? The 55 you expect to collect. Now I've only got 56.7 that I think people owe me because I gave up on 300 of it, but I think I'm going to collect all but 1,700 of that, right? Because I gave up on 3. So it's still 55, isn't it? Everybody agree? Easy, isn't it? Okay. All right, and then it says, on January 2nd, we did that one, on March 15th, the 300 payment was received after we wrote it off. Now what would you do? What'd you receive, gang? Cash. Be sure and get that part. Debit cash for how much? And what do you think you'd credit? Ordinarily, what do we credit? Accounts receivable, right? I think it'd be debit cash and credit accounts receivable, but there's a problem with this. It's not in accounts receivable, is it? So what would I have to do before I do that? Put it back into accounts receivable? Maybe reverse this entry? I wrote it off, and with hindsight I should not have. What would you do? Debit accounts receivable for 300. They're going to pay me, right? And credit what? Allowance. Put it back into allowance, because you now have not given up, obviously, because they're going to pay you, right? It's just reversing it. Everybody see that? Once I do that, then can I debit cash and credit accounts receivable? Sure. But you know what? I wouldn't do that in real life. Here's what I'd do. That would be fine. I'd take it. I would take debit accounts receivable and credit the allowance, and then debit cash and credit accounts receivable. That's just fine. Or if you want, you could debit cash and credit the allowance. Does the same thing, doesn't it? Because these two here, that account receivable is a debit and credit account receivable. That's nothing. Right? If you want, you could debit cash and credit the allowance. Because that's what ultimately happens. But is there anything wrong with debiting accounts receivable, crediting the allowance, and then debiting cash and then crediting receivable? Not really. Because it's the same place. What if they just called me up and told me they were going to pay me? Then I debit accounts receivable and credit allowance, right? And then what would I do when they paid me a week later? I'm not going to debit cash and credit accounts receivable later, right? I'd put it back in receivables if I knew I was going to collect it, wouldn't you? And put it back in the allowance if I knew I shouldn't have written it off. That's all. Okay? All right, good. So you want to try 4? It's bizarre. I've got
The rule would you actually, until they paid you, you try to make the entry. Because technically when they open up an accounts payable, that's when it's saying their word.
account receivable. Well, yeah, but if you know, you've been doing business with them for a long time, you know, and now they're maybe declared bankruptcy, now some new investors invested in the business, and they call you and say really good news, we're not going to have to liquidate after all, we're not going to put their business down, we're going to do is pay you. And if you thought that's credible, especially if you read it out in the newspaper and stuff, might you put the receivable back? Yeah. But you might be right. If I don't believe the people, right, I'm not going to pay you. Put it back there. You know, use your business judgment. Do you think it's a real receivable or not? That's a really good question. Okay? When you look at the financial statements, you want to believe that the account receivable less the allowances, which are really going to get paid, right? So I wouldn't want to increase that number unless I believe that it's going to get paid, right? But everything's a prediction, right? You don't know how much you're really going to collect from yourself, right? Okay? Everything's an estimate in business, okay? So that's one of the things to get out of a class like this, too, is that's what you're dealing with. That is not going to do it for me. I must have some setting weird, huh? Wants me to learn about flicks, whatever that is. Okay, number 4. Match the appropriate letter regarding inventory systems with each of the following statements. I got perpetual, periodic, both, and neither. Oh man, I hate questions like this, don't you guys? This hurts your brain. Okay, well, the first one's not too bad. Uses a separate account for recording purchases. Instead of debiting inventory, I debit purchases when I buy inventory. What's this one? Is that where I perpetually keep track how much inventory I have? Since I didn't debit inventory, I debited purchases? I don't think I'm perpetually keeping track of it. What am I doing? Periodically counting and adjusting the inventory. I have a purchases account, right? So what's that? Periodic. That's B. Requires that purchases be recorded at the cash equivalent cost. Is it only perpetual? Both. I both. Yeah, that's not both. That's C. Both are going to be what it costs you. Requires that two concurrent journal entries be made to record a purchase. A purchase? I either debit purchases, right, and credit accounts payable typically, right, with the periodic system, or with the perpetual system, I debit inventory and credit accounts payable. No. Where are two journal entries there? There aren't. When do you have two journal entries? When you record a sale and cost of goods sold with perpetual, right? That's when you have two journal entries. So the answer to this is D, either one, right? Cost of goods sold cannot be determined until a physical count is taken. Which one is that?
Periodic.
That's periodic. Yeah, we're calculating cost of goods sold, aren't we? Absolutely, that's B. The inventory account is increased for each purchase and decreased for each sale. I'm perpetually keeping track of it. That's A. Absolutely. Used to reveal any inventory shortages and shrinkage that occurred during the period. That one's kind of interesting. Is it both? Yeah, just perpetual, because remember in perpetual you debit cost of goods sold and credit inventory when you sell something. Then you always know how much inventory you've got, right guys? Okay, you debit inventory when you buy it, credit inventory when you sell it. You always know how much you're supposed to have. Then when you count periodically, what happens? Like with perpetual system, you'd identify what was lost, right? Or stolen or something. So that would work for perpetual. What about periodic? You just count and compute your cost of goods sold on. So the answer for 6 is what? A. Okay, just perpetual. Could you do those? And by the way, it's 6 points. 3 minutes. Is that long enough to think about 6 things? There are real short sentences like that? Yeah, it really is. Like if you're doing multiple choice questions or something like that, you could solve this.
Go back over to 1, like 4, 1, you said it's periodic.
Yeah.
Why is that again?
Let's do the journal entries. Okay, if perpetual versus periodic. Here we go. Let's do this. Okay? So let's buy some inventory. Buy $10,000 worth of inventory. What do you do under perpetual? We perpetually keep track of how much inventory we have. So that's how we learned it when we started the class, right? And that debit inventory, guys, would be 10,000. Credit, accounts payable or cash. Everybody good? Then when you pay for it, you debit accounts payable and credit cash, right? Everybody knows this, okay? Periodic, what would you do? We use that other account named purchases, which is like an expense account. We're going to close it, right, at the end of the year. I put my purchases in there in credit accounts payable, and then when I pay it, I debit accounts payable and credit cash. See the difference here? That's what the question was asking about. Okay. Then when I sell something, let's say I sold $5,000 of that inventory cost for $7,000 on an open account. How would you record selling it on an open account if you sold it for $7,000? Debit what? Open account. Paying you later. Accounts receivable. I heard it from somebody. That'd be, I said 7 with the sales price. And credit what? Sold something. What do you credit? Well, I am going to credit inventory, but first it's going to be sales revenue for the 7, and then I'm going to record the cost of goods sold and take it out of inventory, right? How would I, that's just the sale part, right? How would I record the sale over here under periodic? Don't think about this too hard. It is exactly the same. Debit accounts receivable. And credit sales. See it? But if I'm using perpetual, what else do I need to record? I'm perpetually keeping track of my inventory. So here was my inventory, whatever my beginning was, right? Let's say I started with, I don't know, 20,000. And then I bought this 10, right? So here's my purchase. The purchase of that 10 coming into inventory account. Goes straight into inventory, right? If I want to know what the ending inventory is right now, right? The ongoing balance of inventory, and I just sold 5, I said, right? It cost me 5, I sold 5, it cost me 10, I sold half of it, I sold 5, right? Okay? So shouldn't I take 5 out of the inventory so that I now know that I have 25? I think so, sure, if I'm going to perpetually keep track of it. So wouldn't I have to credit inventory? And that's what you wanted to do, and you're right. It's credit inventory for 5. But what do you debit? It's the major cost of getting the sale. What do you want to call it, James? Cost of goods sold. Now, you know what's really nice? These review sessions come out on my high, of course, but I don't think I get paid by the hour. I think I get paid by how much you learn. I'm sorry. That's what I'm doing. This comes out on my high, but this is really worth it. You know why? Because now you guys have read this material. You've tried to do some problems. You've done some quizzes. You've had varying degrees of success. And now when I'm talking about this stuff, you're understanding what I'm talking about. What do you need to start doing to teach it to college students? What do we need to do? Read the material before I talk about it. And really concentrate on it and try to understand it. Do that in all your classes. It's going to make life easy. You come to class and then what? I fill in the pieces. Your professor fills in the pieces for you, explains some things. You could be getting what you're getting today the first day I talk about it. And then how would your quiz have turned out on this material? A lot better, huh? I think from the beginning of the class, did you do that? And by the way, you're young. It's okay. We're all born really lazy. And I think we all kind of stay that way. Ultimately. It's just, can you get yourself going? Can you get yourself motivated? I would rather be sitting right now sipping a glass of bourbon than talking to you people. I'm sorry, but I really would. And I'd certainly rather have one of my granddaughters in my lap or both of them than be standing here talking to you people. True? Are there other things you'd rather be doing right now? But now what you're doing is you're concentrating on what I'm saying, and when you came to class, you just stared off in space and looked angry and stuff like that. Just like every other class I've ever had in my life. And by the end, where you guys are going to be is you're going to be nailing this stuff and feeling good about yourself. That's what's going to happen. Because that's what hard work gives you. You get to feel good about it. When you play in your, what was it, field hockey game, right? Is it a reward for all the hard work you did? Yeah. But you really wanted to play the games. They just won't let you unless you're good, huh? Right? That's it. So they won't let you play out in the business community either, guys, unless you're good. What are you going to do about the cost of goods sold over here? Nothing. I don't record it. So there's the difference. Got it? Then what I'm going to do with both systems is I'm going to go count the inventory, right? But over here, my inventory account still has 20 in it, because that was where I started at the beginning, so if I was using that method. And I'd have a purchases account, which of course the whole year's purchases would be in there, but at this point, I'd have 10 in there. Got the idea? And I'm going to compute my cost of goods sold the same way both ways. What am I going to do on my income statement for cost of goods sold, everybody? What is it? How do you start? What I had at the beginning is called beginning inventory, right? What I buy is called purchases. When I add the two together, what is it? Available. When I subtract the ending inventory, what do I get? What I don't have anymore, which is called cost of goods sold. In this case, I have a cost of goods sold account that has the 5 in it, don't I? In this case, I don't. Everybody got it? Between the two methods? Perpetual, I've got an account with 5 in it. Periodic, I don't have an account with 5 in it. But you know what I'm going to do when I count that inventory? If I did, let's say I counted exactly 25. I'll say this is 25. I would debit 5 here, and I'd go to an account called income summary, and I'd put the 5 in there. And what this represents is the change in inventory. Look what you got. Beginning inventory in either case is 20. Purchases in both cases is 10, because that's what happened. How much is available in both cases? Here's 30, and here's 20 plus 10 is 30. What's ending inventory, everybody? 25. If I actually counted it and I had exactly 25, what would be my cost of goods sold? 5. Ta-da, it's the 5 there, and it's 5 in both cases, of course, is what you sold. Now, how about, though, if I only have 24 ending inventory? Oh, this turns into 24. This turns into 6, doesn't it? Even though I only recorded 5, I'd have to reduce this 25 down to 24 if that's what I had when I counted it. I'd have to take 1,000 out of here, and I would either debit loss on inventory or debit cost of goods sold. If I debit cost of goods sold, guess what? It's in there. But that's where you identify what was missing, right? What went away. And that's why QuickType keeps track of it for you. Okay? A little better, right? All right, gang. Let's try something else. For fun. Okay, here we go. This one, I think this is 12 points or something like that. A question very similar to this one. This one asks you to do the journal entries. I can't remember if I'm asking you for the journal entries or the ending balances in the accounts. At this point, do you care which one I ask for? You have to do the journal entries to get the ending balances, don't you? So let's sort of work it both ways, huh? On December 31st, 28, Scholarship Corporation, this is number 5. Folks at home. Scholarship Corporation had the following account balances. So sales, revenue, accounts receivable, allowance for doubtful accounts. Okay, good. And I guess bad debt expense must have nothing in it right now because we didn't list it, huh? That would make sense, wouldn't it? We don't say anything about it. Okay, and aging of accounts receivable is completed. Each of these are independent assumptions. You sure notice that. I would underline that. So I'm doing each one of these independently. Okay, and aging accounts receivable is completed and estimate is that 5% of the receivables outstanding at year-end will be uncollectible. Okay, and what it wanted me to do is record the adjusting journal entry. But what's the adjusting journal entry going to be for doing the allowance for doubtful accounts method here with uncollectible accounts? What's it always going to be for all of them? What's the debit going to be and what's the credit going to be? Debit, bad debt expense, and credit, allowance for doubtful accounts. That's it. That's because what I'm doing is replenishing the allowance and recording the bad debts with you. That's what I'm doing. So guess what? Before I even get started, I'm not going to screw up. This is going to happen. If I get into it and I get flustered a little bit, I'm certainly not going to write down something ridiculous. What really makes me feel bad is when you have the right number in the wrong accounts. That's ugly. Switch them around or something. I'm increasing bad debt expense, aren't I, if I'm writing off accounts? Does everybody agree with that? I'm increasing the allowance. I'm deciding I'm giving up allowance for doubtful accounts. It's going to be the same no matter what. It's just the amounts are going to be different. And we got it made, huh? Sort of. Okay, on the first one it says it's going to be 5% of receivables. So I wouldn't write this down. I just take the how much is the receivable? 75,000. I take the 75,000 and take 5% back, wouldn't you? I'd write it right on the paper there. But if you want to think about it this way, for purposes of thinking through it, and if it helps to write it down, do so. 75,000 in accounts receivable. The allowance has 4,000 debit. Oh, okay. And it's always the same across all these different methods, right? And sales had how much? 300, and that's a credit. Okay, now, what do I want to do? I want to take 5% of the accounts receivable. How much is that? 3,750. What should be 3,750? So 5% of that is 3,750. Excellent. What account do I want to be 3,750? This is an estimate based on the accounts receivable. Yes. It's what I want to show is the amount that I'm not going to collect of the receivables, which is the allowance. Should the allowance be a debit or a credit? Be careful with this one. It should be a credit. How much must I credit allowance for doubtful accounts to make it 0? 4,000 to make it 0. But how much do I want to credit total? 7,750 to make the credit balance 3,750. So this needs to be 7,750 credit. I know it. And where's the debit going to go, everybody? Bad debt expense. You don't have to write that down if you don't want to. But 7,750 is going over here. That's the entry, isn't it? So 7,750 and 7,750. You practice a few of these, you can't miss them. Oh, well, I would have screwed it up, wouldn't I? Can't even read my own writing. Thank you, sir. Let's fix that. Okay, so that would be A, right? What does B say? Let's try B. 3/4% of credit sales would be uncollectible. What account do I want to be 3/4 of credit sales? Sales, no, sales are 300,000. I want some account to be 3/4. Yeah, bad debt expense. Because what's the account that goes on the income statement with sales? I'm just copying the sales down here. What account goes on the income statement with sales? Whoops. An expense named bad debt expense. You got it. Excellent. Okay. So I want bad debt expense to be how much then, I guess? 3/4% times 300,000. Everybody agree? 2250. Don't you want bad debt expense to be 2250? Because you want it to be 3/4% of sales. Yeah. Okay. If I base my estimate on sales, I'm clearly estimating bad debt expense. Right, guys? So if it's 0 now, what are you going to have to do? Debit 2250. Okay. So it'd be 2,250 debit. 2,250 credit to the allowance, right? Okay. Everybody good? Let's try C. What do you know in C? Assume everything's the same except the allowance has a credit balance of 2,000. So now this allowance, instead of a debit of 4, the allowance is a credit of 2. And what did we just calculate we wanted the allowance to be? 3750. Do you still want it to be 3750 if you want it to be 5% of 75,000? Of course you do. You want this to be 3,750, don't you? How are you going to make that happen? It only needs 1,750 in here, and what account are you going to go to with that? Bad debt expense. Wow. 1,750. It's not bad, is it, everybody? Okay, you're going to love this next one. Assume the same information in B above, but the allowance for doubtful accounts has a debit balance of 2,000. Is that what it says? So I've got an allowance with a debit balance of 2,000. But what did I just calculate? I want bad debt expense to be how much, you guys? 2,250. I don't care what the allowance is for this one. I'm going to make the bad debt expense be what? 3/4% of 300,000, which was 2,250. Oh, it's 0 right now. So what am I going to have to add to it? 2,250. 2,250. And that'll be credit the allowance, debit bad debt expense, right? Exactly the same as B. Doesn't matter what the balance is because you're basing it on sales. Same number. Wow. Yes, ma'am.
Okay, maybe I'm just stupid, but where is the 2,250 coming from?
It's 3/4%, 0.0075 times 300,000 of sales. I hope that's the right number. I trusted you.
I mean, when I put in just like 300,000 times 3/4, it's giving me.
Well, yeah, but you got to put zeros in front of it. Percent will be like this, right? 3/4 of a percent is 0.00, because 0.01 would be 1%, right? 75. Try that. Get your decimal in the wrong place.
Because she's doing 75% of 300,000. You just do 3/4.
Yeah, that would be 75% of it. It's 3/4 of 1%. 1%. Well, 1% of 300,000 would be 3,000, right? So it's 3/4 of that. You can do it that way. Does that make sense?
Yeah.
You got to move your decimal over 2 places. Got it?
Yeah.
Okay, good. Cool. All right. And a lot of times companies will have less than 1% of their sales as bad debt expense. As bad debt experience. That makes sense? Okay. Not gonna lie. Okay, gang. All right, let's change those are all the answers, okay? Those are all the answers for this one. Let's change the problem a little bit. You guys do this for me. what would be the balance? We know what the balance is going to be in bad debt expense in every case. It's just the debit we did to bad debt expense, right? Tell me what the balance would be in allowance in each case and in net realizable accounts receivable in each case. What's the balance in allowance for each one of these? What if I gave you that question instead? So you'd have to do the journal entry first and then tell me what the balance is. What would the balance be in the allowance in A? 3750. There it is. Everybody see it? So that's just be your answer. What's net realizable accounts receivable? What is it always? It's accounts receivable less what? The allowance for doubtful accounts. And the difference between those two is what? Net realizable accounts receivable. That's it. Net accounts receivable. Okay? So what do I want to do? On the first one, I'd say I have 75,000 receivables less 3,750 allowance. What's the net realizable receivable? It's the difference between those two. That's it. Got it? So if I ask you something like that, big deal. Okay? How about on the second one? I got to get in the allowance now, don't I? The accounts receivable is still 75,000, isn't it? What did the allowance start with in B? 4,000 debit, was it, or credit? Debit, because it's the same. So it's a 4,000 debit. And then how much did I credit the account for? 2,250? This wouldn't work out very well, would it? I'd never leave it there on a balance sheet. What's my ending balance, though, in allowance? 1,750. Boy, that didn't work very well. Okay, so how would you find out what your net receivable is? I guess it's 75,000 plus 1,750. I won't give you a question like that, but you got the idea? You got to figure out what the allowance is and net it with the receivable. How about in C? What's my ending allowance? 3,750. What's my receivable? 75,000. What's the difference? 71,250. So now you'd have A and C would have the same answer. Got the idea? Depends on whether you're talking about the bad debt expense or the allowance. Okay. And then on D, I guess we'd have to, what did the allowance start at? 2,000, and we credit it for 2,250. This one doesn't work very well either. I only have 250 in the allowance. What's my net realizable receivable? 75,000 less 250. You guys got it? 74,750. Just not a big deal. Play with this until it just all makes sense. Okay? It gets pretty simple. Okay. Let's try something else. Oh, number 6 is kind of fun too. Relate each situation to the direction of prices by entering the proper letter and space to the right. Costs are falling, costs are rising. What happens to net income and inventory? Okay, tell me which ones you sell. If I'm using FIFO, which ones do I sell? First in, first out. Yeah, my beginning inventory and my first purchases, right? And I keep the most recent purchase. At least that's how I account for it, right? What about LIFO? The reverse. Which ones do I sell? The more recent purchases. So, if costs are, let's do rising first. If you think about costs rising, what would happen? You're going to have higher income when the prices are rising under what? FIFO than under LIFO, because you're going to expense those expensive ones under LIFO, and you're going to expense the cheaper ones under FIFO. That's simple, right? Okay. And what about inventory? Is that the case? Under FIFO, I am keeping the old ones, which are cheaper ones. Under LIFO, I'm keeping the newer ones, right? And the reality is, you guys, it's just like this. These make you think and drive you crazy, really. Okay. With inflation, with increases in costs, right? With inflation, what's going to happen? FIFO is going to have the old ones in inventory. Am I right? or they're gonna have the new ones, FIFO. Be careful, which ones? First in, first out, those are the ones you sold. Which ones do you have in ending inventory? The new ones. So FIFO is gonna be higher, LIFO is gonna be lower, isn't it? All right? With costs increasing. What about cost of goods sold? FIFO is going to be lower, giving me more net income under FIFO, right? Everybody agree? It's true, isn't it? This side has to agree with this side, which is going to give me higher equity because I have higher net income under FIFO with inflation, okay? What about LIFO? Well, obviously, if this is less on assets, it's got to be less on equity compared to FIFO, right? And then what about the expenses? With LIFO, which ones will I be expensing again? The more recent purchases, which are more expensive, which will give me less net income under LIFO, which is going to save me taxes, right? That's why I'm using LIFO, because I'm expecting inflation, right? All of them are going to switch. The arrows are going to switch if you have deflation. Does that make sense? If costs go down. Would that make sense? Because what's happening is with FIFO, you're doing what? First in, first out. The ones I have in inventory are what? The cheaper ones. Under LIFO, last in, first out. If costs are going down, they sold the cheaper ones and kept the older ones, right? The old ones that are higher priced. Okay? So all the arrows will switch direction. So now let's try it, thinking about that. FIFO provides a higher net income than LIFO. When does that happen? When costs are rising. Okay, and then down on number 4, LIFO provides a higher net income than FIFO when costs are going down, costs are falling. All of a sudden, not so hard. Number 2, LIFO provides a lower inventory. When is LIFO lower? LIFO is lower than FIFO when costs are rising. FIFO provides a lower inventory when costs are falling. Right? That's it. Okay, when you do, maybe we'll write it down. With reduction in costs, so deflation, right? Costs are going down over time. What'll happen? In FIFO, if costs are going down, it's first in, first out, I'm keeping the cheaper ones, right? Because costs went down, I'm keeping the most recent ones. Under LIFO, what'll happen is I'll expense the cheaper ones because costs are going down, and I'll keep the older ones that have higher cost. So LIFO will be more than FIFO for inventory, okay, for assets. Okay? For equity, what's going to happen? FIFO must be lower also because assets equal liabilities plus equity, and LIFO will be higher, just relative to each other. When we do the revenues, expenses, and net income, what do we have? This is assets, liabilities plus equity, okay? Revenues less the expenses, and cost of goods sold is an expense. What happens here? With FIFO, if things are now cheaper that I'm buying, and it's first in, first out, what am I doing? I am expensing the old ones that cost more, because I'm keeping the cheaper ones, right? Which is going to, for FIFO, give me relatively less income, which is what gives me less equity over there. Okay? LIFO, what's happening with LIFO? Last in, first out, I'm selling those cheap new ones, right? So it'll give me less cost of goods sold than FIFO would, which gives LIFO more income, which is what causes more equity for LIFO to match more assets. So you could write all that down, right? And then FIFO provides higher net income when? FIFO gives me higher net income when what? Costs are going up, right? Costs are rising. LIFO produces lower inventory than FIFO. LIFO will give me less inventory than FIFO when what? Costs are rising. FIFO provides lower inventory than LIFO when costs are going down. Okay? And LIFO provides higher net income than FIFO. It's got to be the other one, right? LIFO provides higher net income than FIFO when costs are also going down. lot of work, 4 points. Why would I only put 4 points on a problem like this? Because it's really, really hard. Few people get it right though. Might be you, some version of this, right? So I know it takes a lot. But what would I do with a question like this if I were you guys? Look at it and say, oh my God. I'm going to do everything else first. No, I'm not. It's only 4 points to 1, but I'm indirect. Right? Because you got everything else. If you got everything else wired, right? Then you come back. Let's do number 7. Guess I'll do the clock right there. It's only 5. You're making noises over there. Must be a class coming in. All right, so we'll do, what are we up to? 7? Oh, this is a fun one. Wibber or something. Prepares income statements to reflect pre-tax income of $21,000 in A and $20,000 in B, and auditors determine the 2 errors in the inventory amounts as follows. Okay, so here's the income reported and the correct amount, and the inventory reported. With the inventory, income amount reported, and then the correct amount. Oh, okay. All right. This is the inventory amount they show. The correct pre-tax income for each year. I really shouldn't have said income amount reported. I should have said inventory amount reported. It's confusing, isn't it? Because if above it tells you what the income is, and then it says income. But what I meant was they're in the inventory. I guess I had it over in the column. Inventory is 15 on the financial statements, and the correct is 14. And then at the end of the year, 18 and 16. Correct pre-tax income amount for each year is as follows. So I gave you one on a quiz like this, didn't I? How do you approach this thing, you guys? And you do the same thing here. Revenues less expenses, 5, net income. Okay. One of the expenses is what? Cost of goods sold, which is what? Beginning inventory plus my purchases is what's available. I'm going to do both years. Then I'd subtract my ending inventory, right? And that's going to give me what? Cost of goods sold. Everybody knows this, right? It's one of the expenses. Okay, so what happens here? The net income, by the way, for each year, I guess I should have 2 years here too. Year A and B, I guess. Let's get rid of that. Okay. All right. So it says the income reported is 21,000 for A. So this is 21,000. And for B, it's 30,000. And what it wants to know is what should the correct income be. So I'm going to adjust this 21 and this 30 for whatever my over-under statement is. Does that make sense? So we're set up now. 21 is what I know here, 30 is what I know here. Okay. So I can assume, I guess, that the beginning inventory is okay because it didn't say anything about it. It didn't say anything about the beginning for year A. So I think for year A, the beginning is just fine. It didn't say anything about the purchases either, did it? So I guess my purchases are just fine. So I guess my available is just fine. So what's wrong? Ending inventory is what? It was reported at 15, it should have been 14. So it's what? Overstated by 1. So if I subtract too big a number, what would that do to cost of goods sold? Too low by 1, right? Subtracted too big a number? Too low by 1, which means my expenses are too low by 1. If you assume revenues are fine, what's wrong with net income? It is what? Expenses too low, net income too high by 1. And you can prove yourself right that net income's too high by 1 because in year A, what's wrong with assets? It says the inventory is what? At 15, should have been 14. It's overstated, right? So net income's overstated by 1, and assets are overstated by 1. Everybody agree? Overstated, overstated. Therefore, my equity is overstated too, right, guys? Because net income's overstated. That's it, isn't it? So if you think your net income is 1 too high, and it's on the books at 21 on the income statement, what do you think it should be? 20,000, and that's the answer. So get yourself organized. Now, do you have to go through all that? Okay, you don't have to. You just think about through it in your head. You don't have to write it all down. But if you need to, is it useful? Yeah, probably. Right? You have time here. Okay. How about in B? What does that one overstatement in ending inventory do for the beginning inventory next year? This is the trick, guys. It must be overstated, and it has exactly the opposite impact, huh? That's an arrow up, okay? It's overstated by 1, isn't it? If the beginning inventory is overstated by 1 and purchases are fine, what's wrong with available? It's too high by 1. Everybody agree? And what does that do to cost of goods sold? It makes it too high by 1. Those errors are just going to offset each other year to year, right? So now my cost of goods sold is too high, my net income's too low. Would everybody agree with that? So it's 1,000 going the other way. So that would make it 29 so far, right? Whoops, 31. Wrong way. It's my net income, my cost of goods sold is too high, my net income's too low. Yeah. So it should be 31 so far, huh? Oh, but I didn't do ending inventory yet. Ah, that's just the beginning inventory I'm messing with, right? For year B. Ending of year A is year B's beginning. But it's going to have the opposite impact because I'm adding the beginning and subtracting the ending, okay? Well, what else do I have? It said the ending inventory was reported at 18 and the correct is 16. So what do you think? That's $2,000. Which way? The inventory is overstated or understated? Overstated. So it's too high. It's overstated, right? By 2. And what'll that do when you subtract 2 too much? That's going to understate my cost of goods sold by 2. What are those going to add up to, you guys? 1 overstatement and 2 understatement. What do you get? Understatement by 1. Okay? So my cost of goods sold is again too low by 1, which makes my net income overstated by 1, which means my net income should be what if it's 30 now? It's also overstated by 1 for the second year, which makes it 2 overstatement in total, by the way. Right? So what is this going to be? 29,000? So my net income each year is overstated by 1,000, which causes 2 years at 1,000 is 2, right? So my equity is overstated by 2. And by the way, at end of year B, what is my overstatement of the assets? It's 2, isn't it? Works perfect. Yeah, the 2 equals the 2 on this side. Okay? Can you work your way through this? What's the hard thing? Remember, the ending inventory of 1 year becomes the beginning inventory of the next. Errors are just cancel each other. Okay? Play with a few of those. There's not much to do, is there? And then one with massive numbers. That's really annoying, isn't it? I'm still not getting it. Maybe it's because I'm counting today. Yeah. I don't know. So number 8, I guess. All-Star Sports Manufacturing Sporting Equipment and Clothing. Its recent annual report included the following on its balance sheet. So here we got consolidated balance sheets, inventories, and accounts payable. Ah, this looks really hard, mostly because it's really from chapters 1 through 4. I haven't looked at it for a while. What happens with these? In addition to the above balance sheet information, they reported cost of goods sold of 53.8. Inventory purchases and cash paid, and I've got inventory and accounts payable. How does this work, you guys? I buy inventory, right? And I debit inventory, right? And I credit accounts payable. Everybody agree with that? And then when I pay it, I debit accounts payable and credit cash. And when I use it, I debit cost of goods sold and credit inventory. So this requires you know a bit. Okay, again, what's the process? I buy inventory, right? And credit accounts payable. So there's one type of entry I'd be doing, huh? Then when I pay for it, I debit accounts payable and I credit cash. You guys with me? We do that, don't we? And then when I use the inventory, I debit cost of goods sold and credit inventory, right? And when I start a year, what's the balance in cost of goods sold? 0, because it's an expense account, right? All the other accounts are balance sheet accounts, inventory accounts, payable, and cash. We're not going to close those, okay? So what does it tell me? What do I know? It says inventory at the beginning and the end of the year. So what's inventory at the beginning? 6, 10. Let's drop the last 3 zeros. I think we can do that, can't we? On all of them? Yeah. 6, 10, 8, 5, 0. 610850 is the beginning. Whoops, that's ending, isn't it? Way to go, Keith. I'm dangerous. Let's try it again. Ending inventory at 20B is 610 850 plus 3 zeros. Okay? What was beginning inventory? 560 330. What am I doing here, you guys? Writing down everything I know and solving for what I don't know. You ever heard me say that? Just analytics. That's all we're doing. Trade accounts payable, what did it start at? 85,800. And it ends up at what? 90,500. Okay? All right. In addition to the above information, they report a cost of goods sold of 53 billion, 800 million, is that what that is? Yeah. Okay. So what do? Debit cost of goods sold, right? Isn't that what you do for that? This is going to be 53, 8, and get your decimal in the right place. 3 more zeros, and there's really 3 more, but I took 3 off of everything. Everybody see what I'm doing? Make it a little bit shorter. I think I would debit cost of goods sold 53, 8, and what would you credit? Where'd it come from? Inventory. Excellent. This is 53. Whoops. Thank you. I'm dangerous. 53, 8. Get your decimal in the right place. Big numbers make it annoying, but it's realistic. Oh, well, yeah. Debit. I'm really having a rough time. It's a good thing you stayed. I'm kidding. I think we'd have figured it out. It is a good thing you stayed, not for that reason. Thank you twice. All right, there we go. So now what do you know? You know that you have cost of goods sold at 53.8. I don't know anything about cash yet. I know accounts payable started with this and ended with this. I don't know those 2 entries there, do I? And I do know this entry, but I don't know that one. That's what I'm looking for, because it wants to know inventory purchase and cash paid. Oh, what about inventory though? I know it starts with 560, it ends with 611, and I took out 53,800, okay? So what would you do? Solve for how much you must have bought. What's the debit to inventory, you guys? What is that number? It's going to be debit inventory and credit accounts payable, isn't it? I bought it, and then I'm going to have it made. That's the credit over here. That's those 2 numbers. How much is it? Go ahead and calculate that for me. How much did you increase your inventory? Take 610, 850, right? 610, 850, and subtract 560, 330. That's how much the inventory went up by now. I must have bought, how much is that? 5520. Okay, it went up by 50,520. Actually, 50,520,000. Right, guys? And you sold 53 billion, 800 million. So how much must you have purchased? Add your 50,000, right? 50,520, add it to what? 53,800,000. It's not much more, is it? How much is that? It's not very big relative to it. What's this number, you guys? 54 something? Help me. It's 53.8 plus the increase. Oh no, it's still 53, isn't it? The decimal's still in the wrong place. So it's 53 what? 850? And then what's the rest of it? 520. Okay. Ah, so you must have debited inventory for 53,850,520,000. Is that what it was? That's what it went up by, right? You must have credited accounts payable. So what would be your purchases of inventory, you guys? What do you think your purchase of inventory is? I think it's 53,850, right? 520. It's awful when the numbers get big. You have to just relax. Calculate. Better not. It's 53 billion. Yeah, you got to have 3 zeros for that. Yeah. That's it. Okay? And that makes it real unnerving to work with that with real numbers. Okay, so now what do I have? This accounts payable just went up by how much? 53, 850, 520. So how much did you debit it for? And by the way, that debit's going to be to accounts payable, and what's the credit going to be, of course? Cash, because you're paying it. So it's how much came, whoops, it's how much came out of cash, isn't it? So how much is that, guys? If you started at 85.8 and now you owe 90,500, what did it go up by? Actually, it's 85,800,000, 90,500,000. How much did it go up by? What is that? 4,700,000? Is that right?
Yeah.
So you must have paid that much less than 53,855.20, huh? Everybody agree? So how much is that? What made this hard is the big numbers, isn't it?
4.7 million.
No. The difference is 4.7 million. So take 4.7 million away from the 53,855.20. 53,8. Yeah. All right. Good. What made this hard is the big numbers, not the concept, huh? But you got the concept. I won't give you big numbers. Because the math is very expensive. But that's realistic. That's what a company might do, right? Okay. It's a big company. I heard somebody say they didn't follow.
I thought that because the inventory you added, I see where you got 53 million there, you added 50,000.
The increase must be I bought more, right,
Yes.
than I used,
You debited, so you added the 50,000,
which got us this.
22,000, yes.
Okay, then what I do is I say, okay, the credit goes to accounts payable, right? That makes sense? Okay, so what happened was because my accounts payable went up, I must have paid that much less. If my account payable went up by 5 million almost, 4,700,000, I must have paid 4 million less than I added to accounts payable, right? So I just subtracted it from the 53,850, yeah.
Now, okay, now that.
So the 53,845 goes here. Got it? And the 53,845 comes out of here. Okay, that one. Did I do it? Change the problem, have some more reasonable numbers. Yeah. How much cash was paid out is part 2. Here's part 2, right? There's 2. And here's part 1. How much was purchased? author of the problem thought they were being realistic, and it just confuses the hell out of everybody because the math drives you crazy, even though it's just because it's a big number. These intermediate students sitting here now couldn't do it either. Right? Leave me alone. Okay, so you want to do FIFO, LIFO, average, all that crap? You want to do it, or do you want to do, what do we got? Oh, we got 45 minutes. You want to do this one? Or do you want to do 10, 11? Yeah, probably. Some of them are real short. I won't give you real long ones in a lot. I only gave you 12 points for that too. I'm giving you more points. That's not so. Maybe this one's a little there's more sales and purchases, so it's a little harder. 12 is longer. The number 9 rather is longer on this one than yours is. I don't think I have that many sales and purchases. But 3 sales, 2 purchases. I don't know. Maybe I do. So you want to do that problem, or you want to move on to it? I don't know. Do what? 9 is a yes. All right, I'll make one of the intermediate students come up here and do it for you. Who wants to volunteer? We're going to make one of the intermediate students come up here and do it. Which one do you want to volunteer? Cowards. Okay, anyway. LIFO, FIFO, moving average, perpetual periodic. Okay, anyway. No, never mind. You worry about your quiz. She's better than me, trust me. At doing it, right? Maybe not explaining it, but at doing it. Okay, so what do we want to do here, you guys? First, what do you want to do? Maybe keep track of just our units? I don't know. You can do it however you want. And then maybe keep track of dollars, too, of inventory, right? Both of these are inventory. I think that's how I get myself set up, okay? So for inventory at the beginning, how many units do I have? Oh, by the way, in perpetual, you got to keep them in order, right? Periodic, you don't. So the problem is just periodic, don't worry about it. But if it's perpetual, they have to be in order. 200 units, what did they cost? $10. I think right on my test, I would take 200 times 10 is how much? 2,000. So there's my beginning inventory, right? These are $10 units. Okay, we're going to use that. All right? What's the first thing that happens? Sale 1. How many we sell? 100 units. How many units do I have now? I guess you had 200. You sold 100. Where are you at? I think you have 100. How much did they cost? I don't know. That's what we're doing here, is figuring out how much they cost, right? Okay, then what happens? Purchase 1 is the next thing, right? First there's a sale, then there's a purchase. There's 300, right? How many units do you have now in inventory? I guess 400, right? 200 less 100 plus 300. Everybody good? It's 400. What'd they cost? $11, right? So what's 300 times 11? Is that $3,300? It is, isn't it? So I know what's available so far. It's 2,000 plus 3,300, right, guys? Except I sold a bunch of them. Okay? Don't know which ones yet. 315 is another sale. So sale 2. Sale 2 is how many units? Was it 200? So I guess I had 400 units. Now I sold 200. I've got 200 left. Everybody good with that? It's easy. Okay? And then what happens? Purchase 2. How much did I pay for them? $12. How many were there? 250. Just get myself organized. What's 12 times 250? Okay, so purchase 2 is $3,000. Okay, that's this one. I don't know these numbers. That's what I'm going for on the sales, right? And then there's another sale, sale 3, right? On sale 3, how many units did I sell? 200 more? Okay? And I don't know what those cost either. That's what I'm going to figure out. Okay? How many units do you have left in ending inventory? Well, if you think about it, your cost of goods sold schedule is going to look like this, isn't it? Beginning inventory plus your purchases is going to give you available, less your ending inventory is going to give you what, gang? In the world we live in, it's what we don't have anymore, cost of goods sold. Okay? So in units, what did I start with? And then in dollars. I was doing both ways. In units, I started with 200, didn't I? How many did I purchase, everybody? 300 plus 250. Everybody agree with that? It's 550, isn't it? How many do I have available? Looks like 750. Is that right? Did I do my math right? How many did you sell? 100 plus 200 plus 200. You sold 500, did you? How many are left? I think it's 250. What do you guys think? Would you have 250 left? 200 less 100 is 100, plus 300 is 400, less 200 is 200, plus 250 is 450, right? Less 200 is how many? 250, ending inventory. And what your job is to figure out the dollars in ending inventory and the dollars in cost of goods sold, right? That's what we're doing. So if we do it in dollars, what can we do? What's my beginning inventory in dollars? $2,000. Everybody agree with that? What's my purchases? Looks like 3,300 plus 3,000 or 6,300. Everybody agree? How much do I have on hand? $8,300. If I knew my ending inventory, I could get my cost of goods sold. Or the other way around. If I knew my cost of goods sold, I could get the ending inventory. It's easier to calculate the ending inventory usually, because it's got lots of purchases and lots of sales typically. Okay, guys? So let's try our different methods. What would you want to do? Let's see if I can get this thing to work. Anything's possible. What did it do? Just lost everything I wrote down? It didn't really do that, did it? Yeah, I guess so. Isn't technology wonderful? There's only one there. Oh, for crying out loud. Isn't that bizarre? Oh, that's cute. Oh. Uh-huh. All right. So now how do I get out of the group thing? Edit groups by dragging pages. Oh, really? Go away. File. No. Now it won't get out of the group. Okay, I'll tell you what. Still recording, I think. All right. Come on. Okay, here we go. All right, I did that. Okay, so you've got all that written down, so you guys can tell me what they are. What would you do with periodic Let's do periodic. FIFO. How many units were in ending inventory?
350.
Okay. Which ones are they going to be? Now that you know that, which ones are they going to be? The most recent purchases, right? First in, first out. So which ones are in ending inventory? You bought 250 for $12. So which ones are they? It's 250 units times $12. That's it. That's 3,000. What's cost of goods sold going to be? What do we have for total available? We added those together. How much is dollars of cost of total available? 8,300? And how many do you have left? 3,000? So how much don't you have left? 5,300. Does everybody agree with that? So the ending inventory is 3,000, cost of goods sold is 5,300. Okay? It's just cost of goods sold is beginning inventory plus purchases, that's what we had up here, is available. Every time it's going to be less the ending inventory is going to give me my cost of goods sold. Okay? See if we get more lucky this time.
We never said, we finished on one side on the whole thing.
All right. So what do we have on beginning inventory? How many units was it? 200?
200.
How many units did we buy? Okay. How many were available? Cost of ending inventory was 250, we figured, and then if you added up your sales, the units, it was 502, wasn't it? So it worked perfect. Okay, beginning inventory was how many dollars? They were at $10 each, so it was 2,000. How much were the purchases? It was 3,300 plus 3,000, right? 6,300?
Yeah.
So what we had is 8,300 was available. And what we're going to do is we're going to calculate the ending inventory, and that's going to give us the cost of goods sold. On this first one, I have 3,000 ending inventory, right? For those 250 units. If I subtract 3 from 8,300, what do I get? 5,300. You see it? That's all we're doing. Yep. Yeah. How about, yeah, when I wrote the problem, I made it exactly the same. Kind of weird. How about perpetual FIFO? It's the same because you're always selling the oldest stuff, right? Keeping the newest stuff, so it works out exactly the same way. So if I asked you for perpetual, what would you do for me? Just say it, yeah, and be thrilled because you did half the work and you got double the points. Same answer, okay? Please do that, right? Perpetual, whoops, FIFO, yeah, both of them, right? Perpetual FIFO and periodic FIFO are exactly the same things, right? Because you're always getting rid of the oldest stuff and keeping the newest stuff with either one, okay? Will that be true with LIFO? No, okay? So let's try periodic LIFO. By the way, if it does turn out to be the same, it just means you didn't deplete any LIFO layers. Relax and write your answers down. But it can do that, but it's not likely. Periodic LIFO, which ones do you keep? The 250 units you have in ending inventory, which ones are they? Okay, 200 from the beginning, because it's last in, first out. I pretend I buy everything before I sell anything. So I'm selling all those most recent purchases. Everybody agree with that? Okay, so I'm keeping the beginning inventory. So good, that's 200 units at what? So we already knew that was 2,000. So there's part of it. What else do I need? Another 50 units to make the 200, right? 250. Which ones are those? That first purchase, right? The most recent ones. What were those, $11? So how much is that? $550. What's your ending inventory? Is that going to give you a different cost of goods sold if your ending inventory is $2,550 instead of $3,000? Well, sure, it's going to be different by $450, isn't it? So what I'm going to do is I'm going to take 8,300 less the 2,550, and that'll give me my cost of goods sold. You guys can do this, can't you? What's the cost of goods sold got to be? Is it? That's it. You got it. That's exactly right. Once you do this a few times and you think about it, it starts making sense, doesn't it? You realize what you're doing. Get away from it. So you're not just cranking numbers. You can actually think about what's happening to you. Okay, let's try perpetual. What's that one going to do? This is going to drive us nuts. Okay, so let's do perpetual LIFO. You got to keep track of every single thing that happens all the way through. Okay? Every single one of them. Perpetual LIFO. What do you want to do? Did you need to write something down still before I did that? No. Yeah. No, okay. I thought you needed something still. Just making fun of me, don't worry about it.
We were just talking about if perpetual wasn't a thing, it'd be so much easier.
Oh, except everybody does perpetual inventory. Yeah, because we have computers. But the computer does it, you don't, right? We just need to know what the computer's doing. So that's kind of, when it was done by hand, it's a real thing. Yeah, so, all right, so, but you have better information, right? So, okay, what do we do? Beginning inventory? How much, guys? How many units? 200. What'd they cost? $10. How much is that? That's a LIFO layer. If I have sales right now, what did they cost? $10, right? You got to deplete your layer to sell some. What's the first thing they did? Sold 100. Sale one then is what? 100 of these 200. Everybody agree with that? That's it. Okay? So what I'm going to do is I'm going to sell 100 of them, and what did they cost me? $10 because they're the only ones I have. So my cost of goods sold is debit cost of goods sold 1,000, credit inventory 1,000. That's what I'm doing here, right? Crediting the inventory for 1,000. What do I have left? From the beginning inventory, I have a LIFO layer of 100 units at $10, which is $1,000. Does everybody see what I did so far? I have to sell what I have, right? But if I buy some, those would be the ones I'd sell, right? The most recent purchase, okay? I'm only selling the beginning inventory because I didn't buy it. What's the next thing that happens? Purchase one, is that right, guys? Maybe keep it in order. How many are there? 300 units. And see, it's nice to write it right on your paper, 300 times 11. You got it sitting right there, like we used to have on this, too. How much is that? 3,300? Everybody agree? So now how much inventory do I have? It looks like 400 units to me for $4,300, right? Everybody good? So, yeah, that's the deal. Then what happens? Sale two. How many did you sell off? 200 of them? What'd they cost? They're the most recent purchase. They're all 11, aren't they? How much is that? 2,200. Now, let's slow down just a second. Let's see what we have left. What have I not sold? From the beginning inventory, I still have 100 at $10, don't I? That is $1,000. Everybody good? I still have that. And then what do I have left from this purchase here if I sold off 2,200 out of the 3,300? Obviously 1,100, right? Which ones? 300 less 200 I sold is 100 units at what cost? $11. Gee, that's a miracle. 100 times 11 is $1,100. Everybody see it? Get it. Okay? Should do this a few times. You're going to have it made. Okay? Now what will we do? What's the next thing that happens in order? Another purchase, isn't it? Okay, so here we go. 250 at $12. Now it looks to me like I have 450 units in my inventory. Would you agree with that? I already had 200, about 250 more. I got 450. And what do they cost? $12 each, which is $3,000. So what's the total amount of my inventory right now? Looks like $5,100. 3 layers, right? Which am I going to sell first? The most recent purchases. LIFO, last in, first out. I'm going to keep the old ones. So I'm going to sell off those $12 ones before I go back into the 11. My last sale is how much? 200 units. What did they cost? $12. You got it. That's 2,400. Debit cost of goods sold, credit inventory. That's what all those are, right? So what do I have left in my ending inventory? I have 100 units at $10, which is the $1,000 I have from the beginning inventory, right? That's that one. I have another 100 units I didn't get rid of that cost me $11. That's $1,100. Everybody agree with that? And how many do I have left out of that 250 I bought? I sold 200 of them. How many do I have left? 50 units. It's going to be really good because that's my 250 units in ending inventory, isn't it? That's my ending inventory there. How much did they cost? $12. How much is 12 times 50 units? $600. What's my ending inventory? 1,000 plus 1,100 plus 600. What do you get? 2,007? What's my cost of goods sold? add 1,000 plus 2,200 plus 2,400. That's the 500 units I sold. How much is that? 5,600. Okay, what was available on our cost of goods sold schedule we had there, you guys? Remember the cost of goods sold schedule we were doing? What was available on it? 8,300. Subtract your ending inventory from it. What's your ending inventory? 2,700. What's 8,300 less 2,700? It's a miracle. It's $5,600. Ta-da! We're brilliant. Okay? You can do this, can't you? I know you can. A bunch of you guys are going to get all the points in this problem on Friday. A bunch of you are. Just discipline. Think. Right? Get yourself organized and relax. Okay? And it'll just fall right out. It'll just go. All right. So now let's do moving average periodic, huh? Or, I'm sorry, weighted average. Weighted average, the periodic one, right? So average periodic. What do I do? Okay, you guys, how many units were available? Available. How many we have available? 750. How much did we spend for them? The beginning inventory plus all our purchases. How much was available, in other words? Can anybody take $8,300? That's the beginning inventory plus all the purchases, right? That's what's available. Can you take your available and divide it by the units that are available? Available dollars divided by available units. What does that give? A weighted average cost of a unit. How much is that? Ta-da! Guess what my ending inventory is going to be costed out at? $11.06. Guess what my cost of goods sold is going to be costed out at? $11.06. Everybody good? So what do? Take $11.06 from my ending inventory times how many units? How many units you got? 250. So what's 1106 times 250 units in ending inventory? Ta-da. Right? What's my cost of goods sold? How many units did you sell times 1106? There's probably some rounding in this. We sold 500. Should be about double that. How much is that? I hereby decree it's 35 because it's got to add up. Right? It's rounded. Okay? Could we, by the way, go back and take our available, which is $8,300, and subtract the $2,765 ending inventory and get $5,535 cost of goods sold? Of course we can. Are we getting there? We've done this a lot, over and over and over, haven't we, in different settings. And each time you guys get a little better and a little better. Keep it now, right? Work on it between now and the test, and then you'll keep it for the final by now. Right? After you do it for the test, you'll review it a little bit for the final and you'll have points there too. So 15 or 18, I can't remember what I made it on this test. Probably another 15 on the final. That's a lot of points for knowing how to do one thing. Okay? All right, what's the last thing we need to do? The other annoying one. What's that? Moving average. So here we go. And that's perpetual. Beginning inventory. With this one, we're going to get a new average every time we buy something, right? When we sell it, we just sell it the average. Beginning inventory was how many units? At $10. Once you set up, you got it made. 2,000. Then what happens first? A sale? It's 100 units. Guess what they cost? What's the average right now? $10. That's 1,000. So far it looks just the same, doesn't it? What's my inventory right now? 100 units at $10, right? But now what happens? That's $1,000. Now what happens? I bought some. I'll have a new average if I paid it a different price than $10. That's all. So how many did I buy? My first purchase? 300. They were 11, weren't they? And that was 3,300. Okay, now things change. What do we need to do? Get the total units I have available, which is how many? 400 units, everybody agree? And compute what they cost me on average. What did they cost me in total? 4,300. So I got a moving average here. It's kind of a moving weighted average, I guess, right? I've got 4,300 in total inventory cost, and there's 400 units that they cost me. Can you tell me what the average one was? Sure, divide 4,300 by 410, what? 1075, okay. Yeah, it would be 3/4 of the way from 10 to 11 because there's 3 times as many, right? Okay, that'd work. Okay, then what happens? A sale, I think? What's going to be the average on those? 1075, right? Because that's what they cost. It's 1075 on average. How many are there? 200 was it? Or 300? 200? What's 200 units times 1075? What does that equal? It's a miracle. I sold half of them, and it's half of the 4,300. Of course, it's half of it. So what's left? 200 units at what? 1075. Average wouldn't change because you took some out at 1075. The ones left would still be 1075, wouldn't it? 2150. And we're good, aren't we? What happens next? Another purchase. Okay. So purchase 2 is how much? 250. So now I have 450 units. Everybody agree with that? How much did they cost me? $3,000, 12 bucks each. Okay. Okay, so those 450 units cost me how much total? 5150. How are you going to get a moving average out of that? Take 5150 and divide it by what? 450 units. And it's going to go up, right? It's going to be between $10.75 and $12, isn't it? Closer to $12 a little bit because there's 250 of those and only 200 at $10.75. So how much is it? $11.44. Okay. Now when I sell them, that's what they cost me, huh? So sale 3 is how much? 200 units times what? 11.44. How much is that?
2,288. Minus 89 cents if you round it up.
289, I guess. 2,289 maybe. And what's left? 250 units that cost me 11.44 still, of course. And if we consider the rounding, what's 5,150 less 2,289? That would be my ending inventory, right? 5150 less 2289. What do you get? $5,150 less 2189, right? So what do I have left now? How much is that? Somebody? You guys aren't tired, are you? Somebody give me a number. What'd you get? How much? 2860. Yeah, it should be real close to that. Well, it's 2861 with our rounding, it looks like, huh? Okay. Yeah, because it wasn't exactly 4 cents. Okay. So isn't that 1144 times 250 basically? Yeah, we're good, aren't we? It's 2,861 is my ending inventory. What would cost of goods sold be, everybody? Add them up. What's 1,000 plus 2,150 plus 2,289? What's the total for cost of goods sold there? Okay, take the total available, which was how much? 8,300, is that what it was? And subtract 2,861 ending inventory. And what do you get for cost of goods sold? 5,439? We're brilliant, right? Prove ourselves right. Can you do this? Can you do this? Yeah, now you can. Okay. Okay. I'm sick of that problem. Boy, I'm sick of that problem. Just practice more. Start to make sense. If you were flipping LIFO and FIFO, it's got jelly. That's a real common mistake. It drives you crazy, doesn't it? Your point is disappear. Way out. You got FIFO and LIFO straight. What are we talking about when we say FIFO? First in, first out. The ones we still have at the last ones. What do we mean with LIFO? Last in, first out, the ones we still have are the first at the beginning of income. That's the big deal, right? And then the averages are somewhere in between. Okay. So, want to do something else? These guys don't want to start their exam anyway. Only two of them are here anyway. It's not an exam, it's a quiz, isn't it? Yeah, it's a quiz. It's painful. There's only 25 questions. Easy. All on present values and future values.
The rest is just like, it's like interest stuff, right?
There's a little bit on depreciation, it looks like. We sell one. Amortization of patents. Depletion. And then there's time value of money problems, which are all really similar. Yeah, pretty much. It's the same way you're amortizing, it's the depreciation.
Can you do 11 at a time?
Sure, yeah. I'm just going to sit and watch these guys take a test now, or a quiz rather now, so I'll be fine. Advise a student or something. Number 11. Give the required entry at December 31st, 2012, the end of the annual accounting period for the three items below. Webb acquired a patent at a cost of $6,000. So they've got an account named patents with $6,000 in it, right? They debited patents. It's an intangible asset, long-term asset, right? Non-current. Debit patent 6,000, credit cash for something, right? The patent was registered on January 1st, 2005. It has 20-year life from that date, but I didn't buy it until 2010, so how many years are left for me? 15 years. So what period am I going to amortize it over? 15. That's the trick, right? You have to realize, right? It's not a trick, but you have to realize you only get to amortize it for the rest of its life. You only bought 15-year life for $6,000. So wouldn't you take $6,000 and divide it by 15 years? And they held it for a full year, didn't they? Yeah, January 1st to December 31st. What is that? $400. So how much am I going to amortize every single year? $400. It wants the journal entry, right? So debit what? Amortization expense, because I'm expensing it over its life, because I'm using it to generate revenues, so it's an expense. Amortization expense 400, and what's going away? The patent actually goes away, you guys. It gets used up. There will be none at the end. So it's actually going away. So you wouldn't use accumulated amortization or anything. Directly reduce the patent. Sound good? So there's the first one. B. B says, Webb Company acquired a gravel pit. Now, I don't own the land, I own the gravel. Does that make sense? As I take the gravel out of the ground, I'm going to give after I take the gravel out of the ground, I'm using up my gravel pit, right? As I take it out, I'm going to give that land back to the people that I bought the gravel pit from. It's their land. Does that make sense? I used to live next to a coal mine. It was a coal, they dug out of the ground, I'm not kidding. And it was just gorgeous. It's up in Terre Haute. What they did was when it was still legal, they dug a big hole in the ground, and it filled up with water, and it became a lake. And the ducks on it. I'm not kidding. Trees all the way around it. You may have an A-frame house right on the edge of it. Nicest place you ever lived. Right? On a coal mine. Of course, when the kids swam in the water, they got a little bit of coal dust on them. I'm not kidding. A little tiny bit. Yeah, it's still there. Years and years and years later. Anyway, so we paddle a little boat around it and stuff. But what was the deal? They didn't own the land, right? They owned the coal, okay? Now you have to fill it back in and level it off and make it look ugly, like a paper cup top. So I don't know if that's good for better for the environment or not. Okay, but anyway, what are we going to do with this? As I use it up, I'm going to expense it, or if I sell it, it could be cost of goods sold. So this one's a little tougher, but I would have taken several answers here. They bought it for $24,000. They estimate 30,000 tons of gravel can be extracted economically. If you bought this thing for $24,000 cost, you would debit gravel kit and credit cash when you bought it, assuming you paid cash. And if you are going to get 30,000 tons out of it, what do you think, folks? What does it cost per ton? I think it's 80 cents per ton. Does this look an a lot like units of production to you guys? It's not raining outside, is it? Okay. This is like it always is important argument when I grew up. Summertime does this. It's awful. The following tons were extracted: 2010, 2011, and 2012. What year am I doing, you guys? 2012. I think I'm going to take 80 cents times 4,000 tons. What do you guys think? How much is that? 3,200. I have used up this year 3,200 of that gravel pit. And what it says though that they extracted that, and they might have sold it or they might have placed it in inventory. If they sold it, it'd be this: debit cost of goods sold for 3,200, right? And credit gravel pit or perhaps accumulated depletion. I think I'd prefer accumulated depletion. But I'd take gravel pit too, because some people would do it that way. Does that make sense, guys? It's cost of goods sold if you sold it to somebody, right? Because you got your sales price, you sold it for some price, and then part of the cost of goods sold is the gravel, huh? And then what you'd have is the $24,000 gravel pit less accumulated depletion is how much you have left to use up. An alternative would be just to credit the gravel pit if you use it all. Some people would do it that way. I take it either way. Okay? If you are keeping it, it wouldn't be cost of goods sold. If I'm putting the gravel in a big pile, what is it now? I haven't sold it yet. What is it? I dug it out of the ground and turned it into gravel that I can use, right? What is it? Inventory. Yeah, might be inventory. I'd take that too. Generous on that one. On C, on January 1st, 2010, Webb Company acquired a dump truck for $6,000 to haul gravel. It's going to have a residual of 10%. So what do we want to do, everybody? Cost is equipment account, dump truck account has $6,000 in it, right? Salvage value or residual value is going to come off of that, which is 10%, which is $600. Is that right? What's the depreciable value, gang? Talkative group. $5,400. Okay? Everybody agree? And they want to use 200% declining balance. Oh, geez, with a 4-year life. What would straight line be? 1/4 or 25%, right? And a double declining balance, so what would you do? Take it times 2, and it's 50% per year, isn't it? And I want 2012, which is which year? 10, 11, 12. It's the 3rd year. What are we going to have to do here? Take its book value at the beginning, right? Year 1, 2, 3. We don't really have to do 4, but we could. Okay, its book value at the beginning is how much? 6,000. There's no depreciation yet. When am I going to stop depreciating it? When it gets down to 600 salvage, right? Okay? We're not ready to start yet. I know you were just moving. Your hand was up in the air back there. I thought you were going to give me the answer. It's funny. Okay, so 6,000 times what for the first year? 50%. Did they buy it at the beginning of the year? Yeah, January 1st. That's nice. 3,000. Debit what, you guys? They won't say anything. Debit depreciation expense and credit what? Accumulated depreciation. Excellent. So it's using what we already know. It's just in a little different format. So my accumulated depreciation at the end of the first year would be 3,000. What's my remaining book value if you depreciated 3,000 of the $6,000? It's 3,000. How much are you going to depreciate the second year? 50% of it. Oh man, this isn't so bad after all. Debit 1,500 to depreciation expense, credit accumulated depreciation 1,500. Everybody good? What do you have for accumulated depreciation now? 4,500, don't you? What's your remaining book value? You know, it was 3,000 and you depreciated half of it. I think it's 1,500, don't you? Which is, of course, 6,000 cost less the 4,500 accumulated depreciation. Okay? How much can you depreciate in year 3? 50% of it, as long as we don't go below 600, right? Salvage value. So we can do it all. 750, okay? Debit 750 depreciation expense, and that is going to give me how much accumulated depreciation? 5,250. But what I wanted was the journal entry for that 3rd year. What would it be for that 3rd year? Debit depreciation expense, how much? $750. Credit accumulated depreciation, $750. Just relax and do what you know how to do, you guys. What if it was year 4? What's the remaining book value? $6,000 less $5,250 is how much? $750. I'd like to take 50% of it. Can I do that? Of course not. I can't. Why not? Because all I need is what? To get up to $5,400. $150, right? Debit depreciation expense $150, credit accumulated depreciation $150, and this is $5,400, and I am done, right? Study, 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 study. You guys had too much fun on fall break, now you have to work. Sad. You guys goofed off and you're just gonna blow a quiz, right? Is that it? Not this one? Don't have any more than a quarter to go? Study hard, you guys. Thanks for taking the time. I appreciate it. Oh, you guys, I have quizzes 8 and 9 if you want one. They say it's for folks who bother to come to the review. Anybody else?
One session.
You have to borrow something.
No, you did not. Oh.